You hear it all the time. A financial news anchor says, "I own shares of Apple." Then, in the next breath, a friend tells you, "I'm thinking of buying some tech stocks." It sounds like they're talking about the same thing, right? So you nod along, but in the back of your mind, a little voice is asking, "Wait, is there actually a difference? Or are stocks and shares just two words for the same concept?" This is one of the most common points of confusion for new investors, and today, we're going to solve it. The truth is, in casual conversation, using them interchangeably is perfectly fine. But when you want to get technical and precise with your language, there is a distinct and important difference. Understanding this distinction won't just make you sound smarter, it will fundamentally clarify how you think about your ownership in a company. Let's dive in and untangle these two terms for good. Let's start with the more specific term of share. The word share comes from the concept of sharing or dividing something up. And that's exactly what it represents in finance. A share is a single, individual unit of ownership in a specific company. It is the building block. Think of a company as a giant, delicious pie. The entire pie represents the total ownership equity of the company. A single share is one precise, defined slice of that pie. When you say, "I own 10 shares of Coca-Cola," you are making a very specific statement. You are saying you hold 10 individual units of ownership in the Coca-Cola company. The word share is almost always used with a number and the name of the company. You own shares of something. It's precise, it's countable, and it points directly to a single entity. This is the term you use when you're talking about the precise amount of ownership you hold in a specific business. It's the micro view of equity ownership. Now, let's look at the broader, more general term, stock. The word stock is used in a more general sense. It refers to the entire concept of ownership in a company, or it can refer to a collection of shares. Using our pie analogy again, if shares are the individual slices, then stock is the entire pie, or the concept of the pie itself. When you say, "I own stock," it's a general statement. You're saying you have an ownership interest in companies, but you haven't specified which ones or how much. It's like saying, "I own some furniture." It doesn't tell us if you have a chair, a table, or a whole living room set. Similarly, "I own stock" doesn't tell us if you own Apple, Microsoft, or 100 different companies. Furthermore, stock is often used to describe the entire category of ownership in a market. You might say, "I invest in tech stock," meaning you invest in the stock of various technology companies. The key takeaway is that stock is a mass noun, a broader umbrella term. You wouldn't typically say, "I own one stock of Apple." That sounds awkward because it mixes the specific with the general. The correct phrasing would be, "I own one share of Apple stock." So, to crystallize the difference with a simple analogy, think about the difference between music and songs. Music is the general category, it's the stock. You can say, "I love listening to music." A song is a single, specific unit within that category, it's the share. You would say, "I love that song." You wouldn't say, "I love that music" when pointing to one single track. In the exact same way, stock is the general concept of ownership, and a share is a single, measurable unit of that ownership. This is why the legal term for an owner is shareholder. You are the holder of a specific share, a specific slice of the pie. The term stockholder is also used, and is technically correct, but shareholder is more precise and more common in corporate law. When a company issues ownership to the public, it issues shares. You then go out and buy those shares. Once you own them, you have a portfolio of stock. Now that we've clarified the core definitions, let us talk about how this plays out in the real world and why you hear them used interchangeably. The reason the lines are so blurry is that in many common sentences, either word can be used without changing the core meaning. For example, "I am going to buy some Microsoft stock" and "I am going to buy some Microsoft shares" effectively communicate the same intention. The first one uses the general term stock, and the second one uses the specific term shares, but everyone understands you mean you're becoming a part owner of Microsoft. This is where the colloquial, everyday usage takes over. It's not wrong, it's just less precise. However, there are situations where using the correct term matters. In formal financial documents, like a company's annual report, you will almost always see the term shares. They will report earnings per share, not earnings per stock. They will discuss outstanding shares, which is the total number of individual units of ownership that exist. This is because precision is critical in legal and accounting contexts. As an investor developing your knowledge, aiming for that same precision is a sign that you're leveling up. Let's expand this just a bit further. You might also hear about different types of stock or shares. The two most common are common stock and preferred stock. These are classes of ownership with different rights. Common stock typically comes with voting rights, allowing you to have a say in company decisions. Preferred stock usually doesn't have voting rights but has a higher claim on dividends and assets if the company goes bankrupt. Notice the terminology here. We say common stock as the general category, but if you own it, you own shares of common stock. So, the pattern holds: stock defines the type, and shares define the units. A pro tip for you: when you're looking at your brokerage account, you'll see a list of your holdings. The column that says quantity is telling you the number of shares you own of each stock. This is the practical application of the distinction, right there in your portfolio. In conclusion, while the world may use stocks and shares interchangeably, and you won't be misunderstood for doing so, the precise difference is powerful in its simplicity. A share is a single, indivisible unit of ownership in a specific company. It is the slice of the pie. Stock is the general term for the ownership itself, or a collection of these shares. It is the whole pie, or the concept of pie. Remember the music analogy: stock is the music, a share is a song. Embracing this distinction sharpens your understanding and allows you to communicate about your investments with greater clarity and confidence. You're no longer just repeating terms. You're using them with intent, so the next time you're discussing your portfolio, you can confidently say, "I own 25 shares of that company's stock," knowing exactly what each word means. Now, I'm curious, did you already know the difference, or was this a new distinction for you? Let me know in the comments below. Now, I'm curious, did you already know the difference, or was this a new distinction for you? Let me know in the comments below. Now, I'm curious, did you already know the difference, or was this a new distinction for you? Let me know in the comments below. Now, I'm curious, did you already know the difference, or was this a new distinction for you? Let me know in the comments below. Thanks for watching, and I'll see you in the next one.